In India, everybody knows how to build a dam, but there are very few people who know where to build it. India is today the largest cash displacement opportunity available globally. There are options. I mean, there are plenty of options in the market, but people are still banking their money predominantly with banks because of trust.
Hi, welcome to a brand new episode of MobileAppDaily interview series where we catch up with the best of innovators disrupting the digital industry with their unique solutions and leadership style. Today's guest has over 2 decades of corporate experience in financial services and payments, as well as holds expertise in retail strategy, portfolio management, analytics, and consulting for world's leading financial institutions. In 2017, he decided to take the entrepreneurial leap and co-founded a SaaS platform focused on merchant services. His company has recently raised $20 million in Series A funding round led by PayPal Ventures with participation from British International Investment and existing investors, HDFC Bank and Provega Ventures. Let's welcome Raman Kanduja, CEO and co-founder of Mintoak Innovations. Raman, thank you so much for joining us today.
Thank you, Meenal. Pleasure being here.
So I'd like to open the segment with your backstory. You started your higher studies with mechanical engineering and then went on to do an MBA from IIM Calcutta. So what was it about financial services that drew your interest, and how did that experience translate into co-founding a SaaS platform?
Interesting question. Yes, I happen to be an engineer, but I'm an engineer not by design, by default. Time I was growing up, there were not many career choices, not as ample as they are available today. Growing up in a small town, career limitations pushed me into pursuing engineering. Never wanted to pursue that as a career. And that's why I went on to do my MBA. Started my journey as a consultant, and through the journey, I discovered liking for financial services, which is when I moved to American Express, realized that the liking was real, joined a small bank, worked in a large bank as well. And it was around the global financial crisis 2008, 2009, when this convergence of technology and finance started to interest me. And that's when I joined Visa. And at Visa, I spent about 8 years, got a glimpse of how technology can benefit financial services. And demonetization was the moment of reckoning. And that's where we said, like, the India opportunity is for real. Next multiple decades belong to India. And if that be the case, why not create something? And since payments and financial services was something that me and my co-founders were familiar with, we said, why not? This is one of the sunrise sectors. So why not create something for ourselves? And I'm here at Mintoak.
Interesting. Also, prior to co-founding Mintoak, you spent nearly 8 years at Visa India, eventually becoming its head of business development. Was it hard transitioning from a corporate life to becoming a first-time founder?
It's a very exciting space to be in, given, as I said, where India is today. It's a land of opportunity, especially when you talk about digital payments, which is our domain. India is today the largest cash displacement opportunity available globally. So the size of the opportunity is massive. And when you talk about career, it's always about choices you make. Yes, Visa was a cushy job, high salary, but I guess the kind of excitement that you get in a startup more than compensates for the salary that you have possibly sacrificed. And so it's been quite an exciting journey the last 5+ years, building something, and that pride of associating with something that you've built, which I don't think is kind of that easy in a corporate job.
And how would you define the relationship as well as the friction between fintech and the banking sector?
Sure. Let me split this into two parts. First, banking versus fintech, or banking and fintech. So if you look at where it all started largely, or where it gained traction, was around the global financial crisis. A slew of startups came into being wanting to disrupt banking. The idea was disruption was the word, and everybody wanted to disrupt traditional banks. This was in 2008. We are in 2023, and banks have only gained salience, whereas fintechs, while they have built very slick products, but somewhere they're struggling for monetization when it comes to monetization or profitability. And I'm talking about not just any fintech, some of the largest fintechs in the world. Now, the thing is, when it comes to financial services, especially in emerging markets like India, technology definitely plays a big role, which is where fintechs have demonstrated quite a lot. But we tend to understate the role of trust. When it comes to money, trust is an equal, if not an important element, as almost at par, if not, as I said, more higher than technology. So it has to be a combination of tech and trust. While fintechs have been able to solve for tech, the trust part comes with vintage and a host of other factors like regulatory support, which is not there in the fintech ecosystem. Trust, the kind of trust that banks have, is unparalleled. And as I said, it's a function of vintage as well as regulatory support. But banks have a challenge when it comes to tech. They have core infrastructure which is very legacy, but you can't blame them because that infrastructure has been built over multiple decades. For them, they cannot uproot that infrastructure and take a new infrastructure because they have a running business. It's like mid-air refueling. It's never easy, not impossible, but never easy. At the same time, as financial services become more tech, or banking becomes more tech, tech becomes critical for banks' relevance. So how do you? They have infrastructure which is not aligned with modern technology, but they need tech to retain their salience. On the other hand, fintechs have the tech, but they don't have the trust or the distribution that banks have. Why don't marry the two? And that's what our concept is: making customer the eventual winner. So that's our core philosophy.
Understood. And what are the key challenges for SMEs in the present day economy that you're trying to solve with this platform?
Coming specifically to SMEs, SMEs globally have two challenges. One is capital, and second is time. They don't have the bandwidth. They don't have large teams to evaluate multiple things, or they don't have the bandwidth to toggle across multiple platforms. They want, for them, life is easiest when everything gets delivered on a single platform. So what is that one platform? And this is not me speaking. This has come across multiple surveys done by the likes of McKinsey or Payments. SMEs are saying they want everything delivered by one player on a single platform. So what is that one platform that can become the most common denominator, or that resonates with majority of the SMEs? The most critical activity for any SME is collecting payments, because that defines their survival. Yeah. So payment acceptance is that one platform that almost every SME needs. Can you build all the other services, the ancillary services, the adjacent services on that payment platform? Earlier, it was difficult because when you talk about digital payments, they were anchored around those devices called POS terminals. Those POS terminals are not only expensive, but they're dumb. You can't interact. But now look at the way things are shaping up, especially in India over the last 5 years. UPI, smartphones, everything is happening on a smartphone.
Yeah.
Merchants are accepting payments on smartphones. Customers scan a QR, merchant looks at the app, and they see the payment. Now that's a big change, because once life moves to smartphones, or on apps, the possibilities are limitless. You can provide, which is what SMEs have been wanting, provide everything on a single platform, on a single app. So can you start, and that's our idea. We start with the merchant app. App brings engagement, because every time a payment happens, the merchant is looking at the app.
Yeah.
Engagement is equal to interaction because the SME is looking at the app multiple times during the day. So you can start offering other services because they are using this app, they are engaged on this app. You want to sell cross-sell financial products like loans or credit cards. They are looking at this app. They're not going to bank branches. They're not looking at, are not as frequently looking at mobile banking apps as much they are looking at the payment apps. So deliver credit cards, sell credit cards or loans here. And why leave it to payments and financial services? They have other requirements. They need to file their tax returns, GST filings. Can you enable GST filings on that? Can you enable them to take their business online with apps? You can. So that's the idea, and that's pretty much what we do on a single app. We start with payment acceptance. Payment acceptance builds engagement. Then we open up access to financial services. Post that, we start adding non-financial services, or digital services, which are relevant to that SME. So SME gets everything on a single platform. How we differentiate ourselves is, rather than taking our app directly to the SME, we go via banks. Why banks? Because banks have their trust. This SME has a current account with a bank, with that particular bank. If the same bank goes and says, I will give you everything on a single app, starting with payments, financial services, and digital services, it resonates because these guys trusted the bank with their money. So they are likely to listen to this bank much more than any other player. So delivery is through banks, whereas we manage the tech. End of the day, SME is the winner. They get the best of both worlds, nimble tech from a trusted partner.
Also, back in 2017, fintech startups were trying to disrupt the banking sector, and you decided to partner with those very banks to solve payment problems for SMEs. What inspired that decision?
Interesting. Everybody recognizes SME is significantly underserved when it comes to financial services. Everybody wants to target the SME. But the challenge with the SME is they don't have the time to come to a branch. They're not accessing the mobile banking apps as much. So how do you reach out to that SME? You can't use traditional modes like sales team or operations team because SME needs are micro. The economics through traditional modes would never be viable. So how do you reach out? Thing is, they need to accept payments. You offer a merchant payment app, which every SME needs. Their bank offers them a merchant payment app, which is where they start accepting payments. This is the app they are looking at multiple times during the day. This is where interactions start. And once there are interactions and engagement, you can start offering them cross-sell products like loans or cards. That's what banks benefit. Now, the benefit that banks get is they get to focus on their core strength, which is leveraging their trust to get more customers. They don't have to bother about technology because that's our domain. We ensure that the tech is up to date and competitive versus whatever is available in the market, allowing banks to focus on what they do best, which is distribution.
I was curious, what according to you makes Mintoak a major player in the financial service sector while competing against the like of fintech giants like GPay, Paytm, and others?
So that's a great question. Paytm, the names you've taken, Paytm, Google Pay, PhonePe, they've done a good job in creating tech products that are solving for the SME.
Yeah.
But as I said, the starting point is when it comes to financial services, especially in the SME segment, which has a much higher trust deficit than other segments, trust plays an equal, if not a more important role. These guys have started or created a new paradigm. The story is still not complete because till such time the SME is financially included, there is still a vast scope. And that's where we think banks, which lagged initially when it came to products like payment apps, you rarely see banks. That's because banks are not wired, thanks to, or unfortunately because of their infrastructure, to create dynamic products like merchant apps, which is where we are enabling banks to compete with the likes of a Paytm, Google Pay, or a PhonePe. Because we believe, and that's our belief. I mean, there are players who believe they can conquer the world on their own. We believe banks, given their trust and distribution, are best placed to solve for the SME. The only thing they lack is technology, which is what we provide. So we are basically enabling banks to, one, compete with the likes of Paytm, Google Pay. More importantly, ring fence their SMEs because they already have a relationship. Today, these SMEs are using Paytm, Google Pay. Now, these banks are going and saying, "Why don't you use my app?" And it's likely to resonate because they already have an existing and a much larger, much bigger relationship thanks to the current account. That's the first part. Second is once this gets started on payments through this app, as I said, tomorrow this guy needs a loan, which is very small, let's say 20,000 rupees, which the bank today can underwrite, but they cannot distribute because traditional processes make this 20,000 rupees loan unviable. But thanks to this app, now those 20,000 rupees loans that were earlier banks were able to underwrite, not distribute, are now becoming viable because it's offered on a self-serve basis. It's like a do-it-yourself kind of a process on the app. Banks don't have to use their traditional channels, but are still able to monetize. So when we talk to our merchants to see why did they switch over from, let's say, a Google to a bank app, the answer we get is because the trust in the bank is much more. And I mean, I'll give you an example. Much it's like tomorrow if my money gets stuck, I don't know where Google is, who to call at Google. But I know where HDFC Bank is, which person within HDFC Bank to talk. And that's a massive or a massively understated element that we tend to ignore when it comes to financial services. Financial services requires tech because India needs our micro. You can't use traditional methods, but the tech has to be delivered. We believe tech is more powerful if it is delivered through a trusted partner. And there's nobody in the ecosystem which commands trust like banks. I mean, look at ourselves. Today, we are willing to experiment with everything. For food delivery, we look at Zomato, Swiggy. For our cab rides, we use Uber and Ola. Shopping is Flipkart and them. But when it comes to money,
It is the
go
banks.
to a bank. We go to a bank because the trust is so much higher with a bank versus anybody else. There are options. I mean, there are plenty of options in the market, but people are still banking their money predominantly with banks because of trust. So when it comes to loans, it's not just technology. Who is offering it also plays a very important role.
Yeah.
And that's why we believe banks are best positioned to solve for the SME. And the idea is empowering banks can, and definitely, I mean, can we've been able to demonstrate results in making SME the eventual winner because they get the best of both worlds. They get the trust of the bank, delivering tech which is at par with just about anything that's available in the market. So, in a nutshell, we are helping banks become competitive in this space, ring fence their SME relationship, at the same time monetize their SME relationships like it never happened before.
So, how can SMEs benefit from Mintoak? What are some of the key solutions that you're trying to offer?
So, as I said, the starting point for all engagements is payments. The app allows merchants to accept all forms of payments, be it cards, UPI, or even khata or cash recording on the app. They get all their report statements on the same app. Now, these two steps ensure that the SME is interacting with the app on a daily basis. Over a period of time, once the vintage builds up and banks have enough data through the transactions, they start qualifying these SMEs for cross-sell products, which could be loans, which could be credit cards, or non-lending products like deposits. So SMEs can avail those financial services on the same app. At the same time, we start offering non-banking services like they want to file GST, they can. They want to create a digital presence, a digital catalog from the same app. The idea is give the SME everything that they need, be it financial services or digital services on the same app, so they don't have to waste time toggling or managing multiple apps.
What would you credit for the success of the latest funding round where you received $20 million in Series A funding round?
It's just the validation is there. HDFC was an investor previously. Them upping their stake in the current round is a validation. And HDFC started with us as a client. They were first a client, liked what we are doing, became an investor, up their investment in the most recent round. And the other names that you see are like some of the biggest brands in their respective spaces. PayPal, Ventures, PayPal, when it can't get bigger than PayPal, when you talk about digital payments globally, then you talk about British International Investment. They are a UK sovereign fund. They understand banking and tech because they are large investors in a lot of banks globally. So, and HDFC Bank, as I said, is India's, why just India? It's one of the most respected banking brands globally. And Pravega was the first investor, institutional investor that bestowed faith in us. So they will always hold a special status for us. So it's I think it's the focus on creating value. Our investors believe in the approach we have taken, which is working or partnering banks to deliver solutions to the SME. And we've been able to demonstrate value when it comes to, for us, demonstration of value is a function of scale and profitability, and which we have achieved both. We have currently, as I said, we currently work with some of the largest banks in India, Africa, and Middle East. That's the first validation for us. We have decent scale, not at par with some of the names we've taken, but we've shade less than 2 million merchants now, which is still decent. But more importantly, we've been profitable for the last 18 months, which is not something that's common in the ecosystem. And this is something the investors appreciated, and we are where we are.
And did you face any particular challenges in raising the funds, perhaps the first time around or in the second fundraising round?
I won't call it setbacks, but funding is always challenging. I personally am not a big fan of raising money. The thing is, the approach that we have taken is for quite a few VCs, a contrarian approach. There are VCs who tend to back entities that are trying to disrupt traditional players. Whereas we, on the other hand, were trying to empower traditional players. And that's where it created some challenges when those VCs were not willing to acknowledge or align with our thesis. That was a challenge, but the thing is, there are so many VCs. Some will, some won't, so what? You have to keep hustling, figure out who are the VCs who are more likely to align with you or understand your philosophy, and approach those. And that's a learning process that comes with time, and we also went through that same. So we started in September of 2017 is when Mintoak was started. We were very clear. We first wanted to build a solution that resonated with SMEs, demonstrate a path to traction.
How do you deal with equity negotiations though? And how should first-time founders approach the same if they were in a fundraising discussion?
I think the focus should be on creating value rather than chasing valuation. So especially when the first round, your focus should be getting the money that will take you to a point where you are convinced that you would have created value, because after that, valuation is just a byproduct. Valuation is an outcome. Sometimes I see people get bogged when the starting point is valuation. Valuation is always notional till you go public. We have seen in the last 12 to 18 years has been an eye-opener. We've seen in the earlier cycles as well. valuations make sense or become real only when you go public. Before that, it's only notional. So why chase it? Focus on value. Deliver. As long as you're delivering value, valuations will come.
Yeah.
So first round, especially, focus on. They should not get too particular or picky about the valuation. They should look at like what value they are creating, how much they need, and if they can get an investor who can bring in stuff beyond capital to help them get to that point of value delivery, nothing like it. So there are lots of master classes available on the internet, but my experience is there is no set formula. It's uh, starts with both parties aligning, saying this is the VC agreeing this is the best team solving the right problem, and the investing company or the potential companies seeing the VC has interest. After that, it boils down to who is more desperate, which defines the respective positions on the bargaining table.
So
It's
is
as
it
simple as that. I mean, as I said, there's no set formula.
Interesting. What countries are you trying to target next in this expansion of your product?
Immediately on the radar is Africa, Middle East, and Southeast Asia, and then we graduate from there.
So, what surprised you the most about being a first time founder?
That's an interesting question. When you are in a corporate job, and especially an established corporate, you tend to underestimate or take for granted the processes that are in place. Whereas when you start, you don't realize you have to set up the processes, right? From defining the values to making your own coffee you're on your own, which is something that you don't appreciate when you are in a corporate job. There is a process for everything, starting from your vacations to appraisals to everything is kind of set. And we don't pay too much attention or we don't appreciate what went into creating those processes. That appreciation is significantly higher when you start up because you are creating all those processes step by step, bit by bit.
What's your word of advice for first time founders?
Not processes, but couple of principles. One is when you start up, it's like a kid in the candy store. Every day, you will start seeing multiple opportunities. And sometimes founders get distracted with those opportunities. Staying focused is requires very stringent discipline, is not easy, but is super critical. As long as you can stay disciplined, stay on track, stay on your mission, yes, there you will need to pivot if things don't work out, but you can't be experimenting every day. That's the most difficult thing in the startup journey. The number of opportunities, especially like a country like India presents, they're just limitless. But you can't solve for everything. You need to understand that you are on a mission, focus on that mission, build what you can, partner for the rest. Don't try to do everything because time is of essence. If you want to perfect everything and you want to build everything in house, somebody else will take a lead by partnering, and its speed is critical, and staying focused on your core mission is of immense value.
Okay, and what's the most overrated piece of advice that you've heard in the entrepreneurial circle?
So, when we started, and three of us who started, we were in mid 40s, and I'm talking about 2017, where the thesis or the perception was VCs wanted to fund people in their 20s because they thought these are the guys who can take more risk. And we had this mental block saying like, there's this person who's been a serial entrepreneur, and we spoke to him, and he said something very interesting, which has stuck with me till now. He said, in India, everybody knows how to build a dam. but there are very few people who know where to build it. And he says that's the value of experience. He says experience is underrated, but brings in definite value, and you will realize over a period of time. So that was like the most important and underrated piece of advice that I got.
Lastly, what's the worst piece of advice you've ever received as a founder in your entrepreneurial journey?
I think overrated advice. There are like lots of people like raise fast and scale up. Why? I mean, raise fast. I don't get this concept. Raise as much money and then you have enough and more time in the world to think how you want to utilize it. That's not something that align with. We were very clear. We wanted a path to scale with a definite path and a timeline to profitability. And we stayed focused on that.
Well, that was very insightful. Thank you so much, Shraman, for joining us today, and I wish Mintoak all the very best.
Thank you so much, Meenal. As I said, it was a pleasure being here.